Welcome, everyone, to the Insurance Perspectives podcast. I'm excited to be joined by two returning guests on the IPP, Rob Bowen and Jason Hansen. Rob was one of the first guests on the podcast, appearing on episode 4 to talk about Donna, now known as SIAA Insights. We are now on episode 93. Rob is the principal and owner of Patriotic Insurance Group, whom recently celebrated 10 years in business. Congratulations on that, Rob. Rob started a State Farm agency after gaining just shy of 20 years of experience in the financial and insurance sector of New York. Patriotic Insurance Group is a veteran-owned agency, as Rob served in the Navy for 8 years. Thank you for your service, Rob. He is on the board of directors for the HawkSoft user group and the Big Eye of New York. And according to a reputable source, Rob is a prolific morning walk guy. No matter where he is, even on vacation or business trips, he is out on a stroll way before the sun is up. And I can attest to this because I am also an early riser. And if I'm going to run into Rob at a hug conference or an industry event, it's probably walking to breakfast or strolling around the hotel early in the morning. Rob, thank you so much for being here with us again.
Thanks for having me.
And also joining us, we have Jason Hansen of FIG Insurance. Jason joined us on season 2 of the podcast, where we had a fantastic discussion on mental health as an independent insurance agent. In 2004, Jason bought a very small insurance agency in a town of 800 people in Idaho with no insurance experience. In 2011, he started the process of changing his agency for growth. And in 2016, brought on a business partner, Nathan Walker, who now serves as the VP and CFO, to finish the process of change. As of today, FIG has completed more than 20 mergers and acquisitions. Jason, always a pleasure to get a chance to talk with you.
Glad to be here. Thanks, Kenny.
You both are friends of the podcast and two individuals that I thoroughly enjoy wasting your time and asking very silly questions so that I can learn from your insurance experience. So I want to set the stage. And Rob, I'll start with you. And Jason, I'll send this same question to you. But can we talk about each of your experiences with mergers and acquisitions and acquiring books of business, acquiring agencies? Rob, what has your experience been like at Patriotic Insurance?
You're going to get two very different perspectives. I'm a rookie at mergers and acquisitions. I've done one, went through the process. There's a lot of lessons learned that we'll talk about later, but I acquired an agency December of 2023. And that's all I've done. I'm still looking for other acquisitions right now and other mergers. But my experience is solely on the one that I did. And it was eye-opening. It's the best way to describe it. So
excellent. And was that so you acquired a full agency with their staff and their book of business?
Yeah. It was an agency that had been around for 80 years, two team members, a physical location. It was 100% paper, so we'll get into a little bit of that. But everything came with it. So that's my experience in the merger and acquisition.
So that is one end of the spectrum. Jason, what is your experience with FIG Insurance and the M&A space?
Starting in the industry through an acquisition, I didn't really know anything, otherwise. I came straight from college. I had just got done playing college basketball. My wife and we had 2 kids. So I was more seasoned, in that world. Yes, I was, college basketball player with 2 kids. And we moved to a town we'd never lived in before and, didn't know anybody, didn't know the industry. And it was a baptism of fire for sure. Again, it's something that I didn't know what I didn't know. So, I wasn't necessarily doing anything wrong, but I wasn't doing anything right either because there was nobody really to tell me otherwise.
Sure. And then over the course of, I think, 19 years at this point,
21.
you have
Yeah.
21. Yeah. Ooh. You have been able to grow to the point where how many acquisitions are you evaluating in a given year these days?
I'll go through maybe 5 to 10 prospective opportunities each year. So for example, we're hoping to close on one in the next couple weeks. It'll actually be a merger first and then an acquisition at the end of the year. You go through a lot in order to get to, in order to get one. I would say probably,
Yeah.
one in 7 or 8 to 10, and that's that's more from an experienced buyer, and that's
Hmm.
there's a lot of fingers that are out trying to search out for different agencies. It's not just me.
Yeah.
This is kind of the way that we're set up.
And is your preference to acquire the whole business, or do you prefer to buy the book of business itself?
Typically, what we do is an asset purchase. The asset purchase would include everything but the corporation in general, or the LLC. And typically, we avoid those so that, from a tax standpoint and potentially a liability standpoint, we don't really want other people's problems, and usually people are really good about
Sure.
that. They understand that, so it's not generally a problem. But yeah, we're looking for the assets, and when we look at an agency, we place a high value on the people that are coming with it. Those people are extremely important, and an integral part of the business and its success going forward. The less that we can show that there's change within an agency through an acquisition, the better.
For our listeners, hopefully it is obvious why we sought out Rob and Jason, because as we got to know them through the years, we knew where they fit in this trajectory of acquiring agencies. Rob has been very open about his journey and his agency's journey in acquiring this first agency and being open to more. And the very first time I encountered FIG Insurance, who was helping Nathan Walker on probably an accounting support call in our product support team, and learning all about FIG and kind of the amazing process they have for growth through acquisition. I want to go to our next question here, and I'm going to stay with Jason on this, but I definitely want Rob's perspective. So Jason, you started buying an agency. How did you know your agency was ready to acquire that second business, that second book of business? How did you know you were ready, and how do you know when you're ready to bring the next one in?
You don't really know you're ready. You mentally think that you're ready, and that's probably the first step. You know, thinking that you're ready, and then moving forward with it. Because when you think that you're ready, you're placing a lot of energy in that process of, hey, I'm going to go look, I'm going to go start befriending different agency owners. I'm going to, however you're doing your prospecting for acquisitions. Um, what you don't know is that when you bring an agency in, you do an acquisition, your weakest processes get amplified in a way that can scare you, and make you never want to do it again. The challenge with us is that we were not set up to do what I wanted to do, and I didn't know how to do that.
Hmm.
And so,
Mm-hmm.
it was like drinking from a fire hose every time. But it was also solving some problems, or solving some financial problems, or solving some staffing problems. Hey, we'll just go acquire. Um,
Yeah.
and each time you realize that your systems and processes are really, they really need to have an improvement.
Yeah, absolutely. So then, Rob, for you, Patriotic Insurance Group was more well established, like had been established for a longer time relative to FIG before you made your first acquisition. Um, so how did you, as a long term insurance professional, how did you know that, hey, I think I'm finally ready to buy a new business, bring in a new book of business?
I think Jason said it well. You're never really sure. You kind of have to trust the process at a certain point. But what I did was I had someone reach out to me, wanted me to acquire their book of business, and we went through the process. When we got to the P&Ls, they were a nightmare. I asked for a book of business, and there really wasn't a book of business. And the management system had three of the same customers. And this is something you and I talk about all the time, Kenny. Data, data, data. You mentioned Kerry Wallace. There's a difference between me acquiring and Jason. Jason has the infrastructure set up to acquire. I don't. So I need to go outsource valuations. I outsource accounting. You have to have those people around you to keep you honest, so you don't do something really silly. But what I did is when I did that, I tried the first one and it never happened. I then started looking at my agency and go, okay, what do I need to do to get prepared for this? Like, let me tighten up my P&Ls. Let me make sure my data is correct. What I also did, I interviewed 8 agency owners that had done acquisitions, ranging from paper to this to sizes to, and I just said, what were your pain points? What were the mistakes you made? And they were very open and honest. So I took all that information and created a process of, here's how we're going to do this. Now you acquire it. Now what do you do? Now you got to get all this information into HawkSoft. You got to make sure it's audited. You got to make sure it's correct, or otherwise, what are you doing? I mean, your book of business is going to be a nightmare. Based on those conversations, based on talking to some other folks, we created a process to make sure that after the acquisition closed, that we were able to get all the policies. Again, I was coming from paper to HawkSoft. I think it's a little bit easier, honestly, what we did than to try to take data from some other system and collaborate it and whatever else goes on. So I had to create a foundation to say, okay, I'm good with this. Like, I mean, obviously the bank's not going to lend to me unless I have P&Ls, so there's some people involved that keep you from doing stuff, but you really had to be ready, like, hey, because it doubled me, honestly. So now we're going to double. Do we have this? Do we have enough people? Do we have the right processes? I agree with Jason 100%. Your weaknesses when you do an acquisition, they are glaring. I think there's some basics. Have a P&L, have your data correct in whatever management system you're in. Understand what this means when you bring a book of business into your agency and how you're going to support it. But I think the one thing people failed to realize is, when I brought this book of business, I had no relationships with any of these clients. The 2 team members that came with it had all the relationships, and they've been doing this for 30 years. Mm-hmm. So I think you got to remember that the relationship's important. That's where I think the private equity people have made mistakes, is they bring it in and they cut everybody and get rid of Sally, who's been there for 30 years, and think it's going to work. Your retention's going to get killed. And you need to track all that. So that, we can have all this automation and technology and all this other stuff, which is great, but those relationships that the acquired agency has, you got to keep those at least for a couple of years, or otherwise you're going to have a huge retention problem.
There's so much solid advice in there. Jason, there's probably a lot of muscle memory for FIG insurance in being able to acquire a business, in being able to go through those processes. Is there still anything that you have to do to get the business ready? When FIG generally acquires a business, you're acquiring like an office, right? You're not consuming them into your network. You're saying like, oh, okay, we have this new location now and you're part of our group, but you're not folding that into a new location, correct?
I haven't written an insurance policy since 2010. So the reason I haven't done that is because I focus more on the growth side of our company, and that's not just through mergers and acquisitions. So a lot of it has to do with the setup of our company and how we're organized. We're a single agency with multiple agency partners. So like each of our locations is going to have an agency partner with us. And so we focus very much on our agency partner success and how we get there. So when we go through an acquisition, each of the acquisitions we look at, depending on where it's at, but we are creating an acquisition to build a new agency partner for us. Or if we have an agency partner, we are acquiring an agency for that agency partner and folding it into their agency. So if it's a brick and mortar and it's close to an agency location, we can group that together. It's a perfect fit. If it's a virtual agency, doesn't matter. Doesn't matter where it goes. For example, we bought a virtual agency a year and a half ago in Arizona and folded into an office in Idaho. How you are set up as an organization has a big impact on how you are able to process. That muscle memory that you talked about. It's not so much just muscle memory. We also have, our corporate group of things of people, which is essentially it's my partner Nathan and I, Erica, who does a lot of our processing, and then we have 3 virtual assistants. that help us through not just the acquisitions, but all of the management aspect as well. Because we're not involved in the day-to-day activity of an agency, it allows us to focus on everything else. Trying to do all of it is a nightmare, because you can't just stop being an insurance agent and say, all right, yeah, I'm going to go work. People are expecting, your team might be expecting something from you, or your customers who you talk to all the time might be expecting something from you. So how your agency is set up today really has an impact on your ability to acquire at a higher level, even at a single level. But if you're trying to do multiple, it makes a difference. I'm sure Rob can attest to
Yeah.
that.
Oh yeah, I'd love to add to that because I think what a lot of people do at my level is think, okay, I got to find it. I stumbled upon it. A marketing rep told me about it, and this will be easy. Like I can balance being a full time producer, full time agency owner, and full time acquisition manager, for lack of a better term. And it doesn't work that way, which is why I brought in an attorney. I have an accountant. I have Kerry Wallace. I have, you know, because I know people that try to do it themselves. Because again, you have a revenue problem, right? You got to pay for all these people. You have to value this agency, and I don't think a lot of times they get valued correctly. And then you create a nightmare on the back end. It could sink you, honestly. And but no, you're 100% correct because I'm trying to go through that right now. Actually, I'm trying to work on my business, not in it. So I'm not producing as much. I have people that do that for me, so I can now focus more on acquisitions. Am I at the level of Jason? I'm not even close. Like think of me at the bottom, looking up at him, saying, "Okay, that's where I want to get to when I get older." But you got to do it one day at a time. Kind of just get your way through it and be able to spend time. Okay, how am I going to start acquiring agencies? Because it's just like acquiring a prospect. You got to be talking to people. You got to be talking to more, but you have to focus on it. If you're not focused and it's a part-time gig, it doesn't work.
Kenny, can I just interject about one of the
Please.
questions that we sometimes I get is how do you transition out of that role of being that
Mm.
like Rob said, he's trying to figure out how to work on his business instead of in his business. That's a really hard um, mental change, and it's not just mental. There's a lot of physical changes that need to happen. Because a lot of people as agency owners, they're like, hey, I'm the primary person. People come here because of me, and the reality is there could be some truth to that, but don't undervalue your staff. Your staff is really why
Mm.
they're there. So for me, this is honestly what I did. I I started to get out of that day-to-day process by eliminating all the doors and windows to my office so that none of the customers knew I was there. And so whenever people would come in to see me, the CSRs would be like, "Oh yeah, he's not available. How can I help you?" And that transition started taking place, and then eventually, I was still doing things behind the scenes because I needed to, but eventually, I had somebody come in and replace me. In order to do that, I was broke. I didn't have enough money, and so what I did is I even took a reduction in my income, which was really really low at the time. People below poverty level. But I took a reduction in my income to have somebody replace me. As soon as I did that, all of a sudden everything changed. My income doubled within 6 months, and then it doubled again,
Mm.
within a year. And so you make a sacrifice and you're taking some huge risk,
Yeah.
but if you are really wanting to get out of your agency bubble, you've got to make some sacrifices and some real changes, and that's internal changes of how you're thinking about your agency or how you think about your people. You want to be able to replicate yourself,
Mm.
and not hide the information that you know. One of the things that we really tout for our people is that we're 100% transparent, and we want our people to know everything that we know. And it's a
Mm.
huge game changer for us. Like we don't have to hide anything. We can help people be who we are, and we help them be more successful through that process. That's ours. There's numerous ways to be
Yeah.
successful, but that has been our pattern of success, and it has proven out very well for us.
I have two direct reports at HawkSoft, and I like to say I have two colleagues that work in the on the partner team, and I'm fully confident that were I to win the lottery tomorrow, like they would be totally set up to continue and do everything that I have done, because I embrace that same type of philosophy where it's like, I am not going to hide the secret to anything I do. I am going to like willingly share that, willingly say like, hey, you can take this on, because I do think it like it makes a more resilient business, a more resilient team to be like, oh, if Kenny's sick or he falls off the wall rock climbing, like we're going to be fine because we can carry this forward. But I do think I definitely had to like start telling myself like, Keenan can handle this. I don't need to be in this conversation. Like I like I have to tell him like, just kick me out of the room. Like I don't have to be there. So I appreciate you bringing that up because I think it is something that it's a trust thing. But I think you do it a few times and you're just like, oh, okay, they actually have. We did right. We had the right system in place. I want to ask, if it's okay, I want to ask kind of a financial question, not about the financial details, but more about the process. Because Rob, you had mentioned that you were like, okay, I know I'm going to need to go to a bank. I'm going to need to get what I'm assuming a business loan to do this acquisition. And Jason, at this stage in FIG Insurance's history, are you still seeking out, or did you ever seek out funding for these acquisitions, or do you prefer to self finance?
We use other people's money as much as possible. Yeah.
Gotcha.
It's a part of the way that we do our acquisitions is so because we're a partner agency and we acquire agencies for our partners. One of the things that we do as an organization is we will go to the bank as the organization, the corporation, and we will get the loan, go through the whole process, and then we'll transfer it over to the agent partner that is picking up this new book. So like what Rob is trying to do on his own, we do for our agent partners. And that simplifies it so that they don't all have to know, what we know and go through that process of what we go through. And so one of the ways that we when we do that, we go through the bank and we transfer that note and responsibility over to them. And so that simplifies it. So we'll go through the bank, or we have done, I think we've done 10 owner carries as well, which has also been fantastic. And one of the things about getting through your first owner carry is the credibility of, hey, we have been through this process before. You are welcome to call, these people to
Mm,
validate, to see if we are good for, our word. So now that we have been through 10 of them, it's a much easier conversation to say we are good for what we say we will do. We have never missed anything. We got to be true to who you say you are, but
yeah,
we look at different uh, potential funding opportunities. Yes, we do have to put some of our own money in sometimes, especially if it's an owner carry. But if it's not an owner carry, if we can go through the bank, typically we can almost 100% financing from the bank, which is always great. And we can keep that working capital if we need to do an owner carry, which
sure.
a lot of people will consider doing that for tax purposes.
So Rob, you mentioned that you went out and you got an accountant. Um, Jason, I know you have Nathan internally. I imagine he oversees a lot of this. And I know, so in 2011, FIG Insurance brought in, or Nathan joined the company
2016,
then.
yeah.
2016, sorry. Was that a hat you were wearing before 2016? Were you
No,
the finance person too, or?
no, no, thankfully. Um, so it was actually Nathan's father-in-law. Nathan's
Gotcha.
father-in-law, Randy, who's a silent partner. He's retired, but he's a minority silent partner. He took on that hat, and he had accounting background, which was great. But Nathan
Gotcha.
is an expert at what he does, a high level expert. When you have your systems and processes in order, it makes it so much easier. And when you have that internal team, Rob has to outsource, and outsourcing is it's what most people are going to have to do. But it
Hmm.
takes a significant amount more time. You're putting trust into somebody that doesn't have a vested interest in what you're doing. You're just paying them to do
Sure.
something. They may have some experience in your specific space, or they may not. It just depends on what you're getting. But just because it's an accountant doesn't mean that they understand the insurance space. Um,
Sure.
and so there's a lot of variables. Like where we have it internally, it runs really smooth for us.
Rob, what was who was the first external advisor you brought into your process? Um, was it Carrie Wallace? Was it someone on the financial side? Who was like the first advisor that you sought out?
It was Carrie Wallace. She had the acquisition came through the Big Eye of New York, so Carrie was part of that and had done the valuation. And honestly, if if I was going to even bid for it, that gave me a comfort factor that, obviously Carrie
Sure.
knows what she's doing, right?
Yeah.
I know her personally and stuff like that. So, but to just take a step back, probably the first one was 18 months prior to it. I brought an accountant in to start
Mm.
reconciling commissions and doing P&Ls and all that, because I needed to have my financials. You can't show up at a bank with 3 months of financials and, and a napkin,
Mm-hmm.
and a note from your mother. I mean, they're not going to do that. So, I kind of knew that I was going to have to do it. So I did that. So I had, 2 years of financials that were really good, reconciled, it made sense and all that. So when I went to Westfield, it was easier, and they were
Yeah.
able to, look at it. So to Jason's point, yes, it is a lot longer process having to outsource everything. There is a huge trust factor. I think the best point he made was not everyone knows insurance. Like,
Mm-hmm.
my accountant happens to be someone PFS Global that knows insurance companies. They know how to reconcile my commissions and accountants. I mean, I will be honest with you. I've seen P&Ls that have cost of goods sold. Well, I don't know about you, Jason, but I don't really have materials. I don't really have a cost of goods sold. But again, it's an accountant, and what it is it's your trust account. It's your
Mm.
trust account inside your operating account, and clearly that's another whole nother issue that we're not going to get into. But so yes, accountants are helpful, but you need an accountant, and the attorney was also knew how to do acquisitions in the insurance world because, as Jay said, it's an asset purchase. Your asset you're buying is this book of business. Is it correct? How'd you get it? How old is it? What's the carrier splits? There's information that we need that most businesses that acquire businesses, they're just acquiring the assets of the business and maybe a customer list. You definitely you got to spend 2 years, I believe, prior getting your act together. And I mean, to the level of you need to go to a bank, not just, hey, here's my P&L. As you know, in this business, reconciling commissions, it can be a disaster, depending on the book. That takes a long time. Like, you need at least a year of reconciling commissions. Otherwise, how do you know you're right? How do you know you're P&L? I mean, it becomes cash accounting is the problem.
You cracked the door open on the next question I want to ask, because that guidance, hey, have a year of commissions, have 2 years of solid accounting documentation. I think that is a piece of, like, I'm not going to call it folk wisdom because I think that's very like sound business advice. But what I want to ask about are what we would kind of call intangibles. So, what are your go-to folk wisdom pieces for acquiring a new book of business or agency? And if you're open to sharing with us.
With limited experience, I would say, to me, it's almost like a lessons learned that created the secret sauce. So maybe it's a little backwards, but I
Mm-hmm.
think you need to understand cash flows. Like, that's how this works, right? You're buying, you got something to pay back. You got to make sure the cash flows work. You need to also understand P&Ls. You need to understand the balance sheet. So I think the secret sauce is, to Jason's point, it's the culture, it's the
Mm.
people. You're merging two cultures together. You're merging different personalities together. What's the relationship they have with the clients? Retention is huge in an acquisition. If you pay for a book of business, you could haircut it a little bit, but if your retention goes to 60%, or you have some kind of nuclear problem,
Mm.
you're done. I mean, you own it, right? You've already, the paperwork's been signed and you own this thing, and now you got to fight your way back. You need to have the right people around you. You need to go in kind of eyes wide open to know what you're doing. I think too many people make a decision that organic growth is hard, and they're watching the PE firms acquire. They're watching someone at Jason's level acquire, and honestly, probably make it look really easy, but they have no idea the 15 years of experience behind that or the amount of work he's doing. You really, and it's okay to say no. Don't get that shiny toy syndrome or shiny object syndrome that I really got to do this, because I think, because you don't know what you don't know at that point, especially if you're new at this and you've only done one or two or none. So I think it's just, trusting the people around you, finding that group. Like I said, I interviewed 8 agency owners, and it was very transparent. I showed them the numbers, I showed them P&Ls, I showed them, because I kind of thought it was good, but I don't have the experience. I mean, it made sense from a pure financial, it made sense, but from a, hey, what about carrier concentration? Get a letter that you can reach out to the carriers and make sure they're going to appoint you. I learned that the hard way. I had 3 carriers that will not appoint me in New York because they're not offering appointments. Right? They were smaller books of business. It wasn't catastrophic, but we now have to either do book rolls or we got to move people, and it's just pain. It's painful. So if you have a large carrier in a book and they decide that, we're not appointing people, because technically you need to get appointed because you're changing the ownership, those kind of things. Do your due diligence that what you think is going to happen will actually happen, and talk to the carriers. But there's a lot of that in there that, if you go in understanding that you need to ask good questions, you need to be transparent, and don't just put your blinders on, just say, I want to get this done. Because look at all this revenue that's there. This is a wonderful thing. So
One of the secrets for me is relationships, relationships, how you interact on a daily basis, not just with your customers, but especially within the industry. Those relationships that you build have a large impact later down the road. Recently, I was looking at a merger, um, and they wanted an appointment. I won't name the carrier because I don't want to get them in trouble, but it's a carrier that's really important to us, that we have a really large, strong relationship with. And this agency that we were wanting to merge with, they have wanted this carrier for a decade, and they have tried to get tried to get a hold of this carrier, and the carrier's just like, hey, yeah, we're not appointing. And so as I was talking with this merger opportunity, and what that merger looks like for us is essentially they come and they join us and they continue on within their operation, but they get access to all of the benefits that we provide, including the carriers, because of how we're structured. So that's what I mean when we talk about a merger. But in talking with this potential merger, he was like, yeah, they've told us no. So I called the carrier. I said, just let me make a phone call. I called the carrier, and the carrier's response was, Jason, for you, we'll do anything. That is power in a way that others can't work into their line of thinking or their sales pitch, because that's ultimately what it is. And so those relationships translate into opportunities over and over again. And it's not just within the carriers, it's also when you're going out to meet agency owners. Gosh, be real, be kind, um, you know, be willing to help, and mean it. Don't let it just be lip service. Those relationships, they mean something, and you're not going to create them sitting behind your desk.
So many parallels, with just how we operate here at HawkSoft. Like, we are one of like the most fundamental things that we believe is that like people are not going to remember what you do. They're going to remember how they felt when you did it. Rob, you mentioned earlier that something that private equity in this space really misses is that relationship aspect, because they're looking at recurring revenue and they're like, cool, we'll get that. And it's like, well, how do you get that recurring revenue? You have to retain the customer and have a good relationship with them. Yeah, I really hope people just tune into that advice, because it's like, I feel like there's people in all of our lives where we could be like, yeah, I know this individual, but I've had a bad interaction with them, and so I definitely wouldn't be like, oh, hey, here's a great carpenter to call. Um, or, I have some great friends that have always just been great to hang out with, and it's like, oh, you need an electrician? Yeah, I know an electrician for sure. Um, that is still meaningful and valuable in today's world, I think. Okay, I want to talk. Those are all positive things to look at. Um, Now let's talk about red flags. Yeah, and Rob, you interviewed 8 agency owners, so I imagine you encountered some things that are just like, you know what? I don't think I need to touch this one. For both of you, what are the red flags that make you pause and reevaluate your enthusiasm for an opportunity?
One of the biggest red flags is, kind of aligning the objectives of the seller to the buyer. What does the seller want to do? In my case, the seller clearly just wanted to sell. Unfortunately, she was sick. She was not going to be part of it. Very obvious, where we were going with this. Because I think it's hard for an agency owner to go from being an owner to being an employee of someone else. So I think that I've heard that becomes a problem. I think the lack of transparency is a huge red flag. Like, hey, I don't really, because the question is, do they just not have the information or do they not want to share it? And what is hidden behind door number one? Like, what am I going to find when I get there? And because if someone really is interested in selling, I think they would want to be fully transparent, want the transaction to go well, especially if their team members are going to be in the agency working, because now you're going to create a lot of problems. So I think the carrier appointments, making sure that those get done, kind of red flags on that. And one of the things that most of the agencies that I interviewed talked about was focus on the concentrations. Make sure you understand your top 10 clients. You make sure you understand your carriers and how things are distributed. And make sure you have a relationship. So if you've got carriers that you've never dealt with, you might want to just make sure, especially if it's a high concentration. I had a high concentration of a carrier that I had never been appointed with. It only really writes in Northern New York. So I met with the CEO of the company before we did this. And he was blown away. I want to meet with you because I'm one of your largest agencies that I'm purchasing. I want to understand your philosophy. I want to understand who you are as a human, what your culture is.
Every time we go in, we ask for their top 5 clients to see the impact of what those clients could have. For example, I tried to buy an agency a couple years ago. It was a decent sized agency, but one of their, well, I take it back, 3 of their clients made up 33% of the agency. And I had offered to buy everything but that. One of the owners wanted to stay on and keep working. And I said, look, we'll buy everything but that. And we'll let you bring that in and you can continue to manage that piece. So here's 6 things that we ask for when we're gathering information. We ask for 3 years of business taxes. We ask for annual profit and loss report showing annual commission by revenue, commission revenue by carrier. And this can be a summary report. We ask for all monthly commission carrier statements for the past 12 months for all carriers. And they should match up with deposits found in the bank statements. And we will, we'll verify that. We ask for a monthly profit and loss detail report reflecting commission revenue, and those should reflect the same as found in on those second, third items that I said. We ask for 12 months of business bank statements. The statements, should contain or reflect the commission revenue deposits, and then we ask for an annual profit and loss report reflecting annual expenses. There's a difference between not able to show or not willing to show. We had an acquisition about a year and a half ago that they weren't able to show, and so we essentially built it out for him as he was trying to exit. So he worked closely with us to help us build that out, but we created some of those things for him so that we could get an accurate idea of what he had. Another thing that is a red flag is the relationship that they have with their staff members. We'd like to, like when we look at the staff, it's a huge part of our evaluation and valuation as well. Who is coming, how they feel about the situation. Another red flag we have is how they feel about their agency. If it's an agency that's just built by leads through marketing or whatever, and they don't really care about their clients, it makes us pause a little bit. It doesn't necessarily say no, we're not interested, but gosh, we really like it when people care about what they have built over the last 15, 20, 30 years. We ask for that carrier letter so we can talk to all the carriers. And if they're not willing to provide that, that's an issue. We take all those things into consideration as we're trying to determine whether or not we want to move forward with an agency acquisition or even an offer at that point. When you call and ask a carrier, if you don't really have a relationship with them, they're going to give you the lowest level of information that they can, just because they don't know you, they don't can't trust you, they just don't, who knows what you're going to do with that information. On the flip side, if you've got a long-standing relationship with the carrier and they trust you immensely, or they can refer to somebody that, they can say, hey, these guys are legit, they are awesome, you're going to get a high level amount of information. So again, that plug into treat your carrier reps like gold, because they they can provide so much value to you outside of just here's a policy, sell the policy.
Yeah, I was just funny, Jason. I was just thinking, did you ever go to the underwriting level? Because one of the things I experienced after the acquisition was how much the underwriters love my team. And I think that's important because they love them because they don't lie. They send good risks in. They work with the underwriters. They're all writing good business. Our loss ratios are low. Did you ever go to the underwriting level and talk to underwriters, or is that a little too
No,
much?
so we never have, because carriers have expressed that from the underwriting level or the relationship level. Those carriers and underwriters, they speak. They know how the
Okay.
relationship is and
Okay.
interact. So we've never felt like we needed to go to that level.
I have a summation in my head, but before I do that, I'd love to know everything we've talked about. Are there any lessons that you want to share with the audience before we bring this to a close? Any final thoughts?
Don't make assumptions. Like I made assumptions that the carriers would appoint me. Why would you not appoint me? All I'm doing is changing the code from ABC to DEF. Like that just was so obvious to me, and that's not what happened. So don't assume. Spend more time in the due diligence phase than you think you really should. Because I mean, my acquisition took a very, very long time for a lot of different reasons I'm not going to get into here. But so I had plenty of time to do it. I think people like to rush it. I mean, I've had people call me and say, "Hey, I found this agency I want to acquire. I should get this closed in 30 days." Now, Jason can probably do that. Rob Bowen cannot. Let's be honest here, right? So someone has Jason's experience. Yeah, they have a. But if you're new at this and you've just done it, 30 days is not going to give you enough time. So spend time in that due diligence and try to get to know before you try to get the yes. Because I think when you start looking at it and you start looking at it like, hey, this is going to double my agency, this is going to do this. There's a lot of positives, but there's the horror stories I've heard of agencies my size thinking, hey, I'm just going to acquire this. This should be easy. How hard can this be? It's hard. It is not easy. It's a lot of work. And to Jason's point, most agencies my size we're also producers. We're also the head bottle washer. We're the head chef. We're all these other things where Jason is in a position where all he does is acquisitions. He's good. He's really good. And he has a great team. Most agencies don't have that. So be aware of your time and how much time this is really going to take.
For me, I think one of the greatest lessons I have learned through this process was to lower my pride and get out of my own way. Learning how to trust other people and realizing that there's people better at you in doing certain things. And you just need to accept that and have fun with it. Appreciate the fact that you are hiring people or you are partnering with people for a purpose.
Mm,
The we'll call them the freaks that can do everything are so rare.
mm.
They're maybe one in a billion, of people that can just do everything all the time. That's not me, and I'm totally good with that. And I'm so good with that that I absolutely love my job. Once I found my space and got out of the way and said, all right, I'm going to let these people do this because they're better at it than I am. Everything within my company changed, and the attitudes changed, the cultures changed. Um, it has been a night and day difference of just for me of figuring out how to get out of my own way.
This podcast is for agency principals, agency owners, individuals who are thinking about acquiring books of business or acquiring um, other organizations. But I kind of want to look. I'm going to do like a piece to camera here to those that are looking to sell, because I really want those individuals to hear these conversations and realize that A big check might look really enticing, but I think there's something that is owed to team members within an agency, peers within the space, clients that you've spent years cultivating, um, to listen to a conversation like this and think about, yeah, this private equity firm or this bank or whatever that's going to come and offer me just a check without a lot of due diligence or just like a big numbers to make it happen fast. um I think it is worthwhile to talk to the Robs and Jasons of the world, and recognize that, yeah, maybe they're not going to give you the same ludicrous 10x on EBITDA or whatever, but they're probably going to take better care of your people. They're definitely going to take better care of your clients. They're going to like honor that legacy through continued care and attention. So that's my soapbox to agency principals or agency owners listening that are thinking like, hey, part of my exit plan is to sell my agency. Talk to your peers, talk to individuals that you know that are running good businesses or have good relationships, and think about, it could be super satisfying to get a very fast exit without any, dental record check. But doing this hard work with someone who's going to care about your business 10 years after you're exited, that could have its own real value and reward that I think people should consider.
Agency owners have big egos in general. Um, it's getting out of your own way, but realizing that it's your team that's running the agency, not you. You couldn't do all this by yourself. I mean, once you can start as a one man woman show, and I get that at a certain point you can't do it. How do you want, as you sell your agency, how do you want your team to be treated? The agency I acquired, a woman looked me dead in the eye and said, "You need to promise me you're going to keep my team members in the office. You're going to take care of my team and not fire them. And you're going to take care of my clients." That's all she cared about. Could she have gotten more money? Probably, and with private equity with some of the ludicrous things, but you got to think about that. I mean, I always say there's nothing wrong if that's what you want to do, but realize what you're doing.
Mm-hmm.
Realize what, if you want that big check from whatever and you're going to disappear and that's the way you want your retirement to begin. I can't tell someone that's not the right thing to do, but really think about it and think about the legacy you've built and get it. And do you want that legacy to continue? Because there are ways to have those conversations. So it's about our team that runs it. I have 7 team members. I'm not doing this by myself. You got to be kidding me. There's no way. And when you realize you're not that important, it makes things a lot easier.
When you're selling an agency, look at it from a buyer's perspective and look at it in a way that, all right, what could somebody honestly pay for this agency and have it be financially stable so that the agency isn't going to go out of business because we charge too much. If you care about the agency, if you don't care, you find your buyer and let it be what it is. But um, you've got to be realistic and it makes sense for everybody. Yes, we want you to be as happy and as successful as possible, but we also want to remain in business. And there's a happy medium there somewhere. And when you look at the math, if you've got the seller or the buyer and they offer you an amount, and look at the math and see how the math computes out to, all right, if this is a 10-year note, they're going to have so much money to be able to operate their business on such and such. If it's a 5-year note, they're making a little bit more of a sacrifice. If it's a 3-year note, all right, there's a huge sacrifice being made here. They're not going to make any money for the first 3 years because they're trying to get it out of the way. There's a lot of things to think about as a seller. It's your legacy, it's your name that's being carried on. Really consider who you want to sell it to because it makes a difference in the long run.
I could talk with both of you for hours on end, and I would love to do that. And I will do that next time we see each other in person. Jason, Rob, I cannot thank you both enough for lending us some of your time today. You're both very busy individuals. Thank you so much for being here with us.
Thanks for having us.
Thanks, Kenny. Appreciate it.
Thank you for listening to today's podcast. For the best way to contact today's guest, click the episode description. We appreciate you listening and hope you join us next time on the Insurance Perspectives Podcast.